Excellent.
Okay. Well, good afternoon or good morning or good evening, wherever you are in the world. It's great to have you with us today for FundersClub Live. I'm here today with Niko Bonatsos from General Catalyst. It's great to have you on the show.
Thank you. I'm excited to be here.
Great to
everybody.
Have you. Yeah, everybody. So just as a quick reminder, I want to keep my intro short and get to the questions because that'll lead to a really great conversation. The background for why we do this show is we really notice that there's not a lot of accessible information out there about venture capital. It's often referred to as a black box. And we really wanted to make it easier for people to directly interact with top VCs, basically. And so that's what we've been doing, and this is actually our 5th show. And so hopefully we're getting better. And you're welcome if you're listening, and I'll remind the audience again later. Post any questions that come up in the comments. We have a team of people here that will try to get it surfaced, and we're going to try to get to as many questions as we can. We've got a great set of initial questions lined up for Niko. Rather than doing too much background intro, I thought maybe I would ask you some questions about yourself.
Let's do it.
By that way, help you share more about the audience about yourself, and
sure.
We'll go from there. So, just quick question. My understanding is you actually initially studied engineering at Stanford, at Cambridge, and was curious. I think you even worked as an engineer professionally in Japan.
I did, yeah. I was an incompetent engineer.
Incompetent engineer. So, like, what? I mean, I'm going to assume that you didn't grow up dreaming of being a VC one day. If anything, you were studying engineering and so forth. I'm not sure if one dreams of that anyways, by the way, as an aside. But what was the event or the spark or the life event that led you to pursuing a career in venture?
Yeah, so I grew up between Greece and the UK, and I was a perpetual student for many years. So I was a curious mind, which is something, frankly, very relevant to my current, role. And I traveled and worked and studied in a bunch of places in the UK, Harvard, and here in the Bay Area at Stanford. And while I was in the UK at Cambridge, I was 24, 25 years old, and for the first time there, I got exposed to tech and startups. And I met the founders of ARM and others, but quickly realized that
ARM, like the chip.
Quickly realized that the most ambitious ones sooner or later moved to the Bay Area, either to raise money or to find customers or to hire executive team members. So I got lucky. I got the Fulbright scholarship and moved here 7 years ago to go to Stanford.
Okay.
While here, it was 2009, so tried to launch a social network like everybody else. Went and watched the movie, Social Network, the movie. I was very inspired and felt like we had a shot, to build the next big thing. And found out that LinkedIn, was opening up its platform after releasing its API. So we tried to build something on top of LinkedIn, but failed, miserably. During that process, I met VCs, and I was very, intellectually stimulated with everything, that they were doing. Essentially, what does a VC do every day? You meet a ton of people who are incredibly passionate and work on solving a specific, problem, and you pick a few of them every year that you work with, for the next decade. So, as a curious mind who loved technology, I felt like this was the right personality fit for me.
Do you ever, as a curious mind, do you ever get so curious that you wish you could jump back into the operating side and go really deep, or?
I don't. And I think that's for better or for worse. I think that's one of like the core advantages that I have. That I don't get agitated. Like, oh my God, this is a great idea. The team sucks, or they are not doing well. I'll go in. Let me show them. I'm not like this kind of person. Or when you come across a really interesting idea and a team that is performing well, and you have an operating background, often you're projecting your own vision into what they're building, and you're like, this is good, but with my idea, it's going to be 100x better. I don't have that, so I'm very happy to be not the superstar. The entrepreneur is a superstar. To be like behind the entrepreneur.
So you're probably meeting lots of people every day, or I assume.
Yep.
And on top of that, probably have other responsibilities. And a lot of the people in the audience today are founders, aspiring founders, some startup investors. In other words, people who also are supposedly working very hard and doing a lot of things. Do you have any time management? This is a question actually from Pedro. Like, how do you deal with time management as a VC specifically, and maybe if there's any generalizable takeaways for founders as well, but also as a VC?
Yeah, it's one of the hardest things to do, right? Because the only thing that we have as venture capitalists is, our time, which is our main currency, and then our reputation. So, for our time, constantly, making sure that, I leave free time for new ideas from new people outside of the network to come in. But most importantly, ruthlessly prioritize, ruthlessly all the time, so that over time I don't accumulate, a huge network or a ton of body of work in areas that could become irrelevant. So every day, 1/3 of my time is spent on my portfolio companies. 1/3 is spent on meeting with new founders that could become portfolio founders, and the final third is general ecosystem building, like being here, doing office hours at YC, teaching class at Stanford, conferences, recruiting for the firm, stuff like that. But every minute, counts, and every email that you reply to, yes, let's meet up, it matters, because it adds up very quickly.
Do you start your day knowing do you have like a prioritization for that day? Like, this day I'm going to accomplish these things in these 3 different buckets.
Yeah,
and then what do you do about things that just sort of hit you? Because sometimes, as a VC, there's things that just happen, both with portfolio companies and with new companies.
Yeah, so every day, like in the morning, I have a couple of things, that I want, to accomplish every single, day. I really, prioritize, these 2 things and make sure, that they are, going to happen.
Sure.
After that, my calendar is pretty much, booked, for the whole week, so I can review it, all the time, with my assistant. And then I don't leave something that I can do, today for tomorrow. Like my dad was always giving me this advice growing up, if you can do something today, do it. Otherwise, you'll never, do it.
Are you, how many hours a day do you work?
It's a fair amount. It's like, 14 to 16, but it doesn't feel like work, right? Like, it's a privilege, to be doing what I'm doing. Like the only risk, is like, for me to put on a lot of weight over time, right? But other than that, like, it doesn't feel like real work, right?
Sure. Okay. Cool. I should back to the actual questions from the audience here. So this is from Steven from the audience, asking, would you be open to partner with the founders of a company that have a clearly disruptive consumer product or service, but that need to connect with a celebrity endorser to make it a household name? That's a question from the audience member, and I mean, feel free to also address. I think there's an assumption embedded in that question as well. Perhaps you could address.
Yeah, so we've done it, before as a firm, right? We invested in The Honest Company. They had Jessica Alba as the core co-founder, and actually even, went beyond and hired the CEO. So we've done it, like a number of times. It helps a lot, with consumer goods, physical products. I think this concept was really novel, 3, 4, 5, 6 years ago. Now, like every, consumer goods company, has a number of celebrities, or if they're, media consumer company,
Sure.
They can get hold of a ton of influencers, through Instagram and others. So, I would be open, but it depends, like on the idea, the timing, and the market opportunity.
So you mentioned Instagram, which recently was inspired by Snapchat to roll out a stories sort of format. I think some people know this in the audience, but probably there's some people who don't. But Niko actually, I believe, sourced and sort of met Evan at Snapchat.
Yeah, he was a student at Stanford back then.
Okay. Could you actually tell us how you learned about Snapchat, first of all? What inspired you to reach out / what kind of caught your attention about them back then, and also how you got in front of the founder?
Sure. Yeah. So I cold emailed him. So I heard about him from a couple of different people from my Stanford network. So it was like 1.5 years, out of school. And
just to clarify, does that mean that you knew people who knew him?
Yes, I did. I did know a lot of people who knew him, and some of them said he's the most brilliant product designer student at Stanford. Some others said he's a guy who's a little bit hard, to work with because he's very opinionated. So when I hear, stuff like that, it gets me excited, because when people make, like comments, that are very passionate and emotional, it means that they care.
Yeah.
So that was, half of the equation. The other half was people were either very excited or extremely dismissive about the product. So I was like, wow, it hasn't happened to me in a while, that people are very vocal and care a lot about both the founder and the product. So I emailed him on LinkedIn, and
so
he replied.
That's what I was curious about.
Yeah.
Why not ask for like a so-called warm introduction from the people that you knew?
Sometimes I ask for a warm intro, back then maybe, probably I should have asked for a warm intro because, it was my hit rate, wasn't that great, right? I was a year and a half in the VC industry.
Yeah.
I don't know. Sometimes it's easier, right?
Yeah.
To cold email others. I didn't think much about it
Okay.
then.
Yeah.
And he was a Stanford student, right? So I was like, probably not he would reply.
Okay. Yeah. Cool. And then what about? So it sounds like a lot of the part of it was about the founder themselves having convictions and clearly being passionate. The other was about the idea itself seemed to turn some people off, and
Yeah.
certain other
Older people. So
seemed to
his
be-
classmates, were very dismissive, right? Because it came out of a class project. So they were, had started, like in early, 2012. So it was very dismissive, when I talked to him, like in springtime. But what was interesting, to me was that, Evan wanted to build the fastest camera app out there, and he was obsessed with making, communication on media and mobile, much, faster. He was obsessed with that. The metrics were amazing. So 20% of the people were using it over 50 times, a day. You don't see this very often, especially with a product that didn't have like a single player use back then. So you either, use it to send snaps or, receive snaps.
Right.
You couldn't do anything else, by yourself, right?
There wasn't a story, like a
Nothing.
stories thing.
Nothing. And then the last thing is, he was obsessed with making people smile whenever they heard of Snapchat, so Snap, or even thought about it.
Huh. That's fascinating.
Yeah.
Making sure people smile.
Yeah.
That was a stated priority.
Stated priority. Yeah.
That's very cool.
But of course, it was very controversial in many ways, right? Like all the, unfortunately, male minds, whenever they heard of Snapchat, it was like great for sexting, which wasn't the case because 80% of the users back then were women, right? And then the other side of it was like, how could this ever monetize? Like, it's like they don't know anything about the user, they're not using the Facebook graph, content disappears. How could it ever monetize?
Yeah. It seems it's like a recurring theme for folks in the audience that seems to be for the biggest outliers, the companies that really go on to grow really, really large and really, really impact people's lives. They often, it seems like one of the common, they almost have nothing in common, but one of the things they have in common seems to be what you're talking about, which is this polarization where it's the ideas that are amazing actually in the beginning seem kind of dumb or silly.
Yeah, dumb, or they annoy people, or sometimes they sound very, very stupid. They're like
yourself,
toys. I love that there's a theme. So anytime that I hear somebody who's very dismissive of a product, or laughs at the idea of it, or feels maybe even like insulted,
Right.
I want to check it out. I want to talk to the creator.
So that's interesting because I think the normal, like the layperson's interpretation of okay, if everybody likes something, then it's probably good.
Yeah.
And if most people don't like something, then it's probably not good. Like you think of a restaurant at Yelp, if most of the ratings are 5-star or something like
Right.
that. And it's almost like in venture capital or startup investing and just as an operator, you're actually looking not necessarily for the initial consensus views. So do you as an investor, when you're meeting an entrepreneur then, do you find yourself having to actively disregard your personal initial instincts or impressions or something like that and sort of more go from ideally more objective?
Yeah, and especially as I get older, right? That my instincts are not the core native user, a teenage user, or a young college student. Yeah, for sure, what's going on in my head is what could this be? Not why it's going to fail. That's, the number one. And the second thing is, we operate on conviction. So if everybody, agrees that's going to be great, at least, from what we've learned in our firm, it's not going to be great. So all the investments that we've made, where the whole partnership was it's going to be great, and we cannot find a reason not to invest in, all of them haven't worked out.
Huh. Yeah.
Yeah.
And I think
So we
that's,
need some controversy.
Yeah. I was speaking with Josh at First Round Capital, similar sort of data there.
Yeah. Some firms, have figured it out and they're very consensus driven.
Sure.
We are not.
Got it.
Yeah.
Cool. So let's jump back more questions here. So this is kind of a funny question about this from Blake.
Okay.
Who is your favorite billionaire and why? So of all the billionaires out there, who's your favorite?
My
and why?
favorite billionaire. Okay. So I don't know, the one who throws the best parties. I don't know. I don't have a lot of like billionaire like friends, but I know a lot of billionaires. So the ones that I admire the most are the ones who have the most curious mind. They're very hungry and they want to have a positive impact in the world. So people like Warren Buffett, as well as the tech billionaires, the Bill Gateses of the world, the Google folks, and Mark Zuckerberg. It's amazing, like to meet people, who've created so much wealth. They have an unbelievable network, and they have so much to do. But at the same time, in the case of Zuckerberg, he picked up, Chinese, and now he's doing stuff in philanthropy. It's like inspiring.
Right.
Like so, when I think about myself, it's like, oh, geez, I don't have time, to do something else or take care of myself. I'm like, how can a Fortune 500 CEO, make the time for his friends or to pick up Chinese?
Sure.
That's so people who can continue to push the envelope and grow as individuals inspire me.
That's a good answer. So just a reminder to the audience, feel free if you have any questions. This is an interactive Q&A. Just post in the comment section, and we'll surface them up, and I'll ask Niko them. So this next question: have you done something recently? So let's limit this to say like the last couple years or so that you're particularly proud of.
Got married. Very proud of, thank you. Getting married, to my amazing wife. She's making me a better person. Yeah, that's probably, the most recent thing, happened 3 months ago.
Congratulations.
Thank you.
I also just got married 3 months ago.
Congratulations to you.
Yeah.
Felt more responsible for
Yeah,
the first time in my life.
Do you think it's, this isn't an audience question, but out of curiosity, do you think it's changed in any way how you think about startup investing, or is it really not? It's more personal life, and that doesn't really alter?
I mean, everything that you do in life, especially as you mature, can help broaden your perspective, right? Or later on, hopefully, when we have kids, it's going to open up whole new areas of the world that I have no idea about.
Sure. So this question is from Joshua from the audience. What are your thoughts on the state of hyperlocal? So I assume that would include things like on-demand, and it seems no one has nailed it, but users are definitely intrigued. What are your thoughts? That's from Joshua.
Yeah, so many people, have tried to do things, like, the Yik-Yaks of the world, or, like the Ubers of the world, and, some of them that have a transactional model, or got started 20 years ago, like Craigslist, have built really good businesses, like very, very good businesses. On the media front, there are a shitload of dead bodies, of local news or hyper-local, media and networking, products. I'm actually looking into that space right now.
Sure.
I'm looking into that space, not as one, that can create an end user, destination that could be massive, but hey, we spend all of our time online now. There's all this data. But we've never felt like, more disillusioned about, consuming the right ones at the right time. So it feels like
content even.
Like, content, like, you go on, all these different products and like, answering the question, what's happening in the world around me right now?
Right.
Nobody has a good answer.
Such a basic question.
Such a basic question. So it's like, if the New York Times were to be started today, or if Twitter were to be started today, how would they look like? Especially knowing that it's really, really hard to become the end user destination. But you spend 10, 12 hours online, so anywhere that you are hanging out, can you find the best, answer to that question? I think, there could be, like a massive, massive company built on that front.
Yeah, fascinating. Well, if anyone out there is building that, let Niko know. Interesting. So this question is from Jared. How do you mentally switch, as a startup investor, how do you mentally switch back and forth between investing in pre-revenue consumer companies versus enterprise businesses or other businesses where you actually are expecting to see that framework?
Well, fundamentally, we're in the business of backing the most ridiculously ambitious founders who want to build category-defining businesses, right? So, in essence, like the metrics themselves don't matter a lot, especially if it's really, really early on. Good news is that we have, a good team with functional experts for enterprise stuff. Have some amazing partners, like the former CTO of VMware and others, who know these things, cold. So I can rely on their judgment, sometimes, more than mine.
Got it. So this is sort of related on the consumer side. This is an audience question from Pigor. Sorry if I didn't get that pronunciation right, Pigor. You're known for saying you enjoy investing in consumer products that, and this is a quote I'm assuming you've said or written this before, people might perceive as crazy or funny. Can you defend that position from a business perspective?
Yeah, I know actually who asked that question, so hi, Pegor. So yeah, I can definitely defend that because, some of the products, that we're using now every day as consumers, back then, they were viewed as silly, right? Like you look into Facebook, how it got started, look into Snapchat, how it got started. There were toys. Nobody, paid attention to them. Like even in the early days of Facebook, the salespeople who were calling, to sell Facebook ads, they were saying, yeah, we're friends, sir, but for college students, do you want to, sell some ads? So yeah, for sure, I can make the case based on all the previous, successful examples of companies.
So kind of like what you're saying, I guess, would fit in the broader framework of, would you say, like in the consumer space, it's about how we spend our time and what catches our attention and these kinds of.
Yeah. So in the beginning, something is controversial.
Yeah.
But over time, you graduate from one type of controversy, and you become controversial, like for other, groups, right? So the whole idea is how do you become mainstream, and you use, your controversy as a user acquisition strategy.
Sure.
Because it drives word of mouth, and as a result, free users.
Right.
That's how I think about it.
Right. So actually, this isn't an audience question, but directly related, and I personally am curious about this. For consumer software companies, do you believe that it's acceptable for them to be, if they're like in the social space, to be buying growth, or should it be organic? They had, like, for example, Snapchat, it sounds like was organically growing quite
Yeah, so Snapchat is a communications product, right? So it's inherently viral. Yeah, in the early days, you can buy a little bit of growth, but what you want is, to see amazing, like very intense engagement within certain, like populations. And from there, if you find, this incredible product market fit, you can go and buy some more.
Sure.
But if in the history of consumer internet investing is, like filled with false positives, where, founders, start, buying growth. It looks good for a little while, but then it doesn't work out. So it's hard to buy organic, high quality, engaged audiences. It's hard.
Sure.
Unless you know your product market fit.
Yep. Cool. Another audience question. This is from Thoy. And I'm going to rephrase this question a little bit, but basically it was this person was pointing out how Snapchat launched or announced Spectacles, the hardware product, and was curious. This person's asking about, okay, Snapchat can kind of afford that and has the cloud and the distribution network for hardware. What do you think of consumer, or maybe not necessarily consumer, but just like software companies timing that if they feel that there's like a hardware complementary hardware component? Should they launch that at the seed stage, the A stage, the B stage? Should they wait till they have product market fit strongly on the software side before doing that? What are your thoughts?
It depends on the product, right? So if they can monetize, immediately, the hardware, or if it's a brand new way of like, solving a problem, you can, get started from the beginning. It's become much cheaper now to actually, design, fund, launch, hardware product than what it used to be before. Like I was reading this really cool article the other day which said, hey, Kickstarter, campaign owners, even before you actually make your product, there is a copycat already, that you can buy in China, right? For all the successful Kickstarter, campaigns. So what does this tell you? That in the consumer hardware world, what matters the most is, like incredible execution, like so that bringing products to market really quickly and capital efficiently.
So you think the defensibility is no longer directly in the ability? You're mentioning some of the older guard hardware companies. I guess not really. It's sort of a stretch to say ARM would fit in there, but
yeah.
But let's say, and Apple, I think the defensibility is coming from more the network effects and the software actually than necessarily the...
Yeah, a lot of it is coming, from that. But the thing with, hardware is like, the cycles have become so much shorter now. So you constantly need, to maintain incredible, success rate with your customers. Otherwise, the next iteration of your product, another company, will go and win the heart of your customers. It's tricky, to be on top of the game, designing new hardware, financing, the new production, and selling it, everywhere. It's really, really hard. So it takes certain, founders who are able to do that.
Yeah. Hardware is hard.
Hardware is hard. That's what people say.
Yeah. Anecdotally, I spent like 8 years of my life starting a hardware company, so I sort of know that personally. It is quite difficult. So another question from the audience. This is from Alexander. Kind of related to the question that I asked earlier, that the other, I think somebody asked earlier about paid acquisition. So basically, given, digital acquisition costs are rising, for example, Facebook, I think a year or so ago, really high prices on ads and things. How do you think about, for a startup founder, how should they think about structuring ad testing while rolling out a consumer product?
Yeah, do a lot of them and be very ridiculously disciplined. Like you have to,
So
like
don't spend. It's more about like A/B, prioritize the A/B testing.
A ton of A/B testing, ruthlessly, prioritize, the budgets you're spending on a number of tests, and constantly iterate. And even if you have, some early success, continue to test, because it may very well be a false positive. Like frankly, of the capital that we're investing in a consumer, tech startup, 30-40% of it is spent on marketing, and this is also, the capital that can always, be better managed, and it never is. So like ruthlessly, test again and again and be disciplined about it. Nobody wants cheap growth. Unless you have access to cheap capital, cheap growth is never a good idea.
Got it. So I think we're wrapping up. We're approaching our final minutes of the live stream. If you have any questions, get them in now. Quick question for you. So do you focus on a particular stage at General Catalyst? And if so, could you share, so for example, early seed, where maybe it's more of the idea, late seed, where maybe there's it's still mostly an idea, but there's some early traction and product market fit, Series A, Series B?
Yeah, so the good news is, we have a lot of capital. So we have $4 billion under management. The most recent fund is, $850 million. So we're not capital constrained. So we can write checks that range from a few $100K to $50 million. But the bulk of what we do is, $2 to $15 million. So I think, of a lot of the activity, that I generate, or companies I get excited about, Series A, seed, and Series B. So I meet with 15 companies every week. 6 of them are, seed stage, 6 of them are Series A, and 3, later stage.
Okay. And is it just the dynamic? Because I know there's a lot of founders out there watching this. Like, is the dynamic that you find them, or do they find you, or how would
there's no dynamic, no pattern, But of course, if any of our portfolio founders, asks me to meet one of their friends, I'll do it.
Got it. Oh, interesting. So I'll ask this as one of the last questions. This is from an audience member, Javan, asking, what role do you see third-party funding sites? I think that means online investing platforms, perhaps such as FundersClub. There's AngelList out there as well, and others. What role do you see those kinds of platforms? They each have their differences, but in helping to source deals in the future?
Yeah, it's already happening more and more, right? Like, you guys are very, very good in terms of sourcing opportunities, helping them with early funding. You have an interest in promoting, this company. So I receive your emails, read them every week, and it's like shopping for me, right? Like, it's like going to the department store demo day. So anything that's, really, really cool, I ask for an intro or reach out. For sure, it's going to be increasingly a bigger role, and that's great for the ecosystem. Great.
Well, thank you everybody out there who tuned in today. I think this was an amazing conversation. Thank you, Niko, for sharing your thoughts and stories with us. That was fascinating.
Thank you, Alex, for having me.
Yeah.
Thank you all for attending.
Great. Take care, guys.